Hi everyone and welcome to our market update for November 2016. I'm Aaron Upcroft. I'm here with Rob Gilmour.
Hi Aaron.
We're coming live after the Melbourne Cup, so the day after the decision. So tell us about the decision yesterday, Rob.
Thanks Aaron. Well, through the midst of all the chaos of Melbourne Cup, where the nation stops, the Reserve Bank doesn't stop, but actually they didn't cut rates any further, so they've left them on hold at 1.5%.
Great. It was pretty much expected. So is this something that we can expect from now on as well, or just tell us a bit about what's behind it?
It was widely expected, though there are still economists out there that are expecting further cuts from the Reserve Bank, in the months ahead and into next year, about creating more stimulus for the economy, where the inflation is low and employment is stable but a bit patchy, and growth generally still below trend. So there is still talk of further cuts to rates, but the Reserve Bank governor is going to be very reluctant to do this, particularly where the property market is still galloping ahead in cities like Sydney and Melbourne. And I think the risks of stoking further asset price bubbles in that area will hold them back from here. But it's very interesting. The rates are very low, and it's probably not a bad time to consider locking in those low rates. You must be seeing some pretty good deals on your side.
Yeah, look, very much so. The fixed rates have been really low. Variable rates are still very competitive. Interestingly, though, one of the best fixed rates in the market, with one particular lender, which were both in the threes for their 3-year rate and their 5-year rate. They lifted last week without any notice really, and they went up 15 points. Now, that was still probably lower than some of the other rates in the market anyway. However, that was quite a change for us to see, and it was without any notice. So whether it's indicative of other lenders following suit, perhaps not, because this is still a lender that is really priced at the top of the market. So we'll see as it pans out, but still some amazing deals out there. Absolutely.
Look, I mean, fixing is a conversation that's coming up with my clients, and I think it's a pretty good time to be thinking about that. Long-term rates starting with a 3, sounds pretty good. The tide will change. I mean, a couple of things can happen. There is talk of potential downgrade in Australia's credit rating, and S&P have actually put Australian lending institutions on negative watch. So if they get their credit rating cut, the cost of their money goes up, and they're going to look at passing that on to customers, of course. So that's one to certainly watch. I think that the deals at the moment are pretty good. If something like that does happen, it would be pretty good for retirees as well, who are looking to get money on term deposits, because deposit rates will probably go up as well. So that's a flip side to it.
And what about things like US election? What kind of things? What's that going to introduce?
Yeah, well, funnily enough, markets are in a bit of a tailspin at the moment. Markets hate uncertainty. So last I checked, we were down about 70 points today. So you expect a bit of a wild ride up until next Tuesday. It's still an open call. You never know with these things. And we've had a roller coaster year. We had Brexit, and we had a post-Brexit bounce to 5,600. Today we're down to 5,200, and that sort of seems to be a level of support for the market. We've also got a number of interesting events coming up, like rises in US interest rates, which are being priced in, and so interesting times ahead. But certainly the markets sort of come back to a little bit more value, I guess.
Sure. Well, that's our market update for November 2016. We'll see you again next month.